Well, hello everyone. Welcome to the For Pete's Sake podcast, and this is our 2023 year in review. And let's get this started right.
Cheers. Cheers, brother.
It is kombucha, by the way.
Yeah, don't worry. We're not encouraging alcohol use
In midday.
and talking about real estate.
We're encouraging gut health.
Yes.
That's what we're all about.
All right, let's roll the logo. All right, yeah, so first podcast here in person, brother.
Yeah, so we've upgraded. We stepped up our game.
Yeah,
Instead of doing the StreamYard from different locations, we're going to do these podcasts together.
yeah, which feels good.
Just means I got a shower now.
Yeah. Ended up getting a new haircut for it, so hopefully that looks all right.
Alex gets a new haircut every 7 days?
Yeah, I think it's part of being a realtor. All right, so let's dive into it. Bit of a wild year.
Yeah.
So the average price peaked in April. Since that point, we declined by around $109,000. So for the first 4 months of the year, we went up 14%. 14% in 4 months. That's pretty good. Then we declined by about $109,000 and basically lost all of the gains that we saw in those first 4 months. And we finished the year with a difference between January and December of 3.2%.
Somebody predicted that.
I think it was me. We'll find that out later though.
I'm going to do a playback of our predictions for 2023, but someone, I won't tell you who, kind of nailed it this year.
Yeah. You did okay. I did get the 3% though.
Yeah, you got 3%.
I did get the 3%. We'll go over our predictions at the end.
Hang on, let's roll the tape.
Yeah.
The way I see this year playing out is you'll see prices trend down for the next couple of months still. Bank of Canada is meeting, the 25th?
That's right.
Maybe another quarter point. I don't see it being a big one at this point. So then prices will trend down for a few months. We'll have a spring market. Not an aggressive one, but I think the buyers will come back. And then temporarily we might have even some bidding wars, maybe March, April, maybe into May. But I really see it balancing out by the summertime. And I see prices going down again later in the year. So we're going to trend down a little bit for the first few months. You might see prices go up throughout the spring market or the months just after as you know, closing dates and whatnot. But then by the end of the year, I see things trending back down again. And so the good news is I think we'll have a bit of a spring market. And I guess the other good news is, not to tease the next one, I don't see us spinning into a big recession.
Interesting.
Yeah. So no recession. Yeah.
Well, what about that? Was there no recession? Or tell us how Q2 and Q3 unfolded this year.
Yeah, so we were close. Technically, we had one for a couple days there, but then Statistics Canada came in and said, nope, let's actually revise that number. And we actually saw positive growth, surprise. So I think it went down from a negative, I think it was around -1, and it came up to a positive. It was still a decimal, but it was positive. So, I mean, I think I was still right, but...
So for those who don't know, you need what? 2 back-to-back
quarters.
Negative quarters
of GDP.
So we had a negative Q2, then we had a negative Q3, but then what happened?
Well, they changed Q2.
They changed
Q2. Yeah, they changed Q2 to be positive. So dodged a bullet there, which is good. I don't think we're out of the weeds yet, but let's see. December job numbers didn't look good. This is a little aside. I did a bit of pre-research.
Do you?
Yeah.
Go get her.
So we added around 74,000 people to the country in December. 100 new jobs.
Ooh, that's not good.
Not good. Most of them part-time. So that's not looking good. 100 jobs out of 74,000. That's not good. So yeah, I mean, that could be the story in January. We could see more of that. I still think we're heading for a recession. We'll talk about that at the end, but I'm still pretty set on a recession.
Well, doom and gloom over here
Yeah.
is always set on a recession. But honestly, even though we're not technically in a recession, we've talked about this before, the gas pumps, the
Yep.
grocery prices.
Yep.
Some would argue that we are. Or
Yeah.
we're in at least a fringe recession.
Yeah. No, I think we are, but we'll see. But yeah, let's get back to that year in review with the average price. So for sort of annual basis, what we can do is we can look at what was the average price for the year. So they add up all of the average prices for each month, divide them by 12, and we get a number for the year. Here's something that's sort of neat. $632,000 in 2023, $633,000
And
in
this is
2021.
average detached freehold Peterborough City.
Yeah, so we're pretty much the exact same average price as we were in 2021. So 2022 was basically a write-off, and essentially we lost all of the gains that we saw in 2022 in 2023. So pretty much all of the gains that we saw got wiped out. That could be a result of larger borrowing costs. I mean, you look at interest rates, I would say they've gone up, 300% since 2022. You could see fixeds in like a 1 to 2%, and now we're talking, 5 to 6, 7, depending on, your situation. So that definitely has a dramatic impact on how much people can borrow and essentially how much they can spend. So I think that's what we saw with that average price and why we're seeing a decline.
Yeah, well, to me, 2022 was a bit of a mulligan,
Yeah.
if you want to call it that.
Yeah.
Because we came out of the gates in January of 2022, and the market just was hopping. It was, maybe you want to call it, people pent up from the pandemic, and the buyers just came back and cranked up prices. And the peak, usually your peaks are in the the spring or maybe the fall.
Yeah.
But the peak in 2022 was in February, and that's where we saw the record highs. It trended down a little bit, and then we came back to reality by later in the year. So that's why I think of almost like I don't even look at 2022 because it's kind of an anomaly.
Yeah, and there's a ton of demand. So, I mean, that's sort of where we ended up. We finished at around 678, 679 for the average price. Sorry, 579 for the average price in Peterborough for a residential detached home. And that was in December. We started the year at 598. So a decline of about $20,000 over those 12 months. So it is a decline, but I mean, it's not huge. Also, we have to take into account the sample size. So not a whole lot of sales in December. We can touch on that now. The sales basically took a nosedive since around June. And since then, they've been declining. For example, in June, we saw 160 sales in the month. So, I mean, round of applause for June there. Then we dropped down to 52 in December, 54 in November. So it just, yeah, like Led Zeppelin.
I got that reference.
As they say. And then in terms of sales numbers for the year, this is a little bit shocking. The lowest amount of annual sales in the last 10 years.
Not surprised.
Yeah, so that stings a little bit. I mean, we've seen activity in the Peterborough real estate market, and it basically dropped off a cliff. For example, last year we saw about 400 more sales than we did this year.
No.
Yeah.
And even though this is Peterborough City centric, the narrative is pretty consistent across the surrounding areas as well. It's kind of the kind of year we had.
Yeah. So, I mean, what did you find in terms of how the year played out for your business and sort of your conversations with buyers and sellers? What was sort of the most common phrase that you heard?
Common phrase. I don't know, shifting markets might be one of the common phrases.
Yeah.
But my summary of the year, this is from my personal sample size, plus conversations with colleagues and researching. There's a lot of things going on in the world, a lot of different variables, but it felt like 2023 was the first conventional real estate year we've had. So for those who don't know, usually the real estate year kicks off pretty slow coming out of the holidays, but then the busiest time is usually the spring market. Kind of gets going sometimes as early as March, especially the waterfront market, and it gets hopping. So usually May, June are usually your peak months. And there's a bit of a summer lull because people are busy, they're vacationing, kids are home. But then in the fall, after people get back into their routines, there's another pop, and usually late September, October and November, maybe like the third, fourth busiest months. So we come into 2023, we have a spring market, and that's what the numbers show. So we go into the summer, there's a lull. So we were expecting the fall pop. And what happened is coming out of Labor Day into September, sales started to pick up, and then that's where they went off a cliff. Normally the October numbers are high, November numbers are fairly high, but we basically didn't have a fall market. Buyers retracted, prices went down. A lot of people scared buyers out there.
Yeah. So I mean, for all the number folks out there like myself, let's look at 160 in June as sort of the peak. For reference, 93 in September, then 64 in October. Generally, your, what would you say, last couple weeks of September and sort of certainly going into October are kind of the start of the fall market.
Yeah.
So normally those are a bit high, and from September to October, we fell off a cliff. We lost about 35% in the number of sales between those 2 months. Then November had 54 and December had 52. Now, December's not really surprising. Not a lot of people, are out trading real estate in, after maybe the 12th, after maybe the 15th.
By mid-December, people are on holidays.
Yeah.
Typically.
So that's sort of what we saw there. Story for me, I would say, was the year of interest rates. The amount of people I talked to, and I can't say that I blame them. I can't say that, they were wrong at all. Interest rates went crazy between the last 2 years. When you think about buying a home in 2022, prices are nuts, interest rates are low, bidding wars, but there was a ton of demand. Everybody wanted to go out and buy real estate.
Yeah.
In 2023, though, it was a totally different narrative. People were very interested in what happened with the Bank of Canada, what was happening with fixed rates, and most of the stories that I had were surrounding interest rates. What's going to happen with them? They are too high for us to think about making a move right now, whether that's breaking a mortgage, whether that's getting a new mortgage. People didn't want to move because the cost of borrowing was a lot higher than they were used to over the last couple of years. So I think that was just sort of a big shock to the market. And that was, exactly what the Bank of Canada was hoping to do. And I would say that they accomplished it. Now, what's interesting is you look at how the Canadian real estate market reacted to these interest rate increases. So we went up about, 5% in terms of the overnight rate with the Bank of Canada. So that was over the last maybe year and a half.
Right.
And prices only dropped, generally speaking, around 5%. So, normally you would see an increase like that and prices would tank, which is exactly what the Bank of Canada was hoping. Now, let's get back on track here with the Peterborough stats and let's talk a little bit more about new listings. So what's interesting is we can look at the graph here. And again, we did see a peak in new listings in June, which directly corresponds with the number of sales. So May, June was generally the peak for sales in 2023, and it was also the peak for new listings. So interesting to see there. Awesome correlation to see there. And then we saw a little bit of an uptick in September as well. So that's something to note. Basically, we didn't see that uptick in terms of the sale market for the buyers side of things, but we did see sellers hoping for that regular fall market. And potentially that is what we saw. And maybe that brought the market values down a little bit because there were more listings, but the buyers just didn't come in the fall.
Yeah. And the buyers that did got some pretty good value this fall.
Yeah. So for reference, I mean, you had 258 new listings in June and you had 205 in September. So that's just a huge, I think, disparity between the amount of supply that was on the market in the fall and the amount of demand that was there. And I think that's where we started to see that average price start to creep back down.
Yeah, when buyers have inventory and selection, you see a lot less holding offers. Maybe in the right property, in the right market, we still see a little bit of holding, but not like early 2022 where 90% of homes were holding offers.
Yeah.
If anything, buyers had their pick of the market this fall. And as I said, some people did really well.
Yeah, and some people played the market and others didn't. And others are sort of waiting. I think ultimately it is really, really tough to time the market. And, making a move is a pretty large decision. And there are a lot of variables that come into play. So it doesn't necessarily mean that you have to go out and buy real estate right now. Or if you do see a good deal, speak with a real estate professional, speak with your family if family is involved, and talk about what this change means to you, what this means for your lifestyle, because ultimately when you do move, it is a huge change in lifestyle. So just a little caveat there. Let's talk about annual numbers for the number of new listings. So we didn't do bad. We didn't do poorly in 2023. We saw 1,970 new listings, and that's around the 10-year average, which is about 1,900. So we were slightly above the 10-year average, I believe. And I mean, the listing side of the market was really there. It was lower than it was in 21 and 22, but it was still there. Now, what was sort of your experience with sellers in 2023?
Frustrating.
Yeah.
So the problem is when you have a kind of abruptly shifting market, just last year in general, like the prices in March, prices came down quite significantly. So you have sellers looking at prices from early 2023, which were higher. In some cases, they were looking back at the peak, which was like 25-30% higher back in that sweet spot, which was February, March of 2022. And they're the comparables they're looking at. So it's the conversation you have to have with your clients when this happens. You just got to show them the current stats, where the market is right now. Because if you overprice in a market like this, where there's a lot of inventory and not a lot of active buyers, and you sit on the market for over a month, 60 days, 65 days, it can be a killer. Where if you price appropriately in this kind of market, you can still have your property move. But if you're hyper fixated on these prices from Narnia from a year or two ago, it's not going to happen. Sometimes you have to have a conversation. If this is the number you need, the reality is that might be 2-3 years from now. The market's got to trend back up to meet your expectations. So I guess seller expectations and with an abruptly shifting market was the toughest conversations I was having with sellers this year.
Yeah, me as well. And I mean, you can't really blame them in that situation, because maybe you were looking at comps from 3, 4, 5 months ago, but that was maybe the last time a house sold on your street. Peterborough, it's a big city, but it's a small city. Yeah. I think we only have probably around 100,000 people here. So there, the last sale on your street might have been in February and March. And, it is tough to know what the market's doing if you're looking at what's happening just on your street, which are normally the best comparables. But we have to adjust what those sale prices were to what's happening in the current market. And that's why it's always important to speak with an expert, and especially somebody that sort of knows what's going on with the market, is in it every day, and is keeping aware of what's happening with the stats. And on the other side, where, like we were talking about, moving is a big decision. So if it is a financial decision where you need to get a certain number for your house, maybe it's not the best time to move if you can't get that number. And that's okay.
Right. Like,
people just need to realize that's okay. If it's not going to happen now, it will happen in the future. I do think that long term, obviously there's a recession in 2024, but after that, I do think long term real estate will, in theory, if history repeats itself, continue to go up. So just sort of keep that in the back of your mind when you're thinking about, transacting in this sort of market. Now, we also touched on days on market. So 51 days on market was the average amount of days that it took for a house to sell in December. Yeah. So we can pull up the graph here, but essentially we were going pretty flat, and then it looks like a hockey stick for the last sort of November and December. And I think that is sort of indicative of not only a winter market, but also a lot of hesitancy with what was happening in the market.
Yeah, no, definitely. 51 days to put in, it was December, but to compare it, February of 2022 when everything's holding, things were selling 7-9 days.
Yeah,
they're holding, boom, off the market. And then it's almost like educating the buyers and sellers
Yeah.
to the market you're in. Because you'll have the armchair quarterbacks looking at all the stuff from last year, and they think they have a good sense of things. But the reality is, you got to keep your pulse on the market. It can change month to month, even week to week.
Yeah. And we definitely saw it week to week. I think that was the huge story of 2023. You sort of had to keep an eye. You'd see, okay, I could get this house maybe for 500. And then, a week and a half goes by and a similar house sells for 480.
Yeah.
And while things were declining, it was especially important. And again, it comes down to, can you time the market? And regardless of what, we say, regardless of what, any professional says, it's impossible to know what's going to happen. You can sort of track some stuff and maybe look for trends, but ultimately, unless you've got Irish luck, you can't really predict what's going to happen in the market. And, it's important to think about that as well. And that's why it is important to think, when is it right for us to move, sort of thing.
Yeah. One thing is sellers too, when it's time to make the move, if you have a realtor like promising you a certain price point just to get your listing, make sure whoever it is just proves it to you. Because the numbers are out there, unless you're really rural Ontario, they should be able to show you how they come up with that number. That's just one of my faux pas is when, a realtor will come in and just promise you the moon and then way under deliver. I like to have, those tough conversations should be happening at the beginning.
And the reason that's important is because any buyer's agent is going to pull the comps and educate their client on what to pay for that property. So you want to make sure you're, pretty in line with what a buyer is going to pay for the property with your list price. Because if there's a giant discrepancy there, buyers might not even look at the property or want to look at the property. So that's definitely important. One thing we've been tracking is the sales to new listings ratio. So this is sort of neat. We can look at what the sales to new listings ratio was every single month. And there's a graph here that we'll pull up, but you can see sort of where we dropped off in terms of the sales to new listings ratio. Again, this is basically taking the number of sales and dividing it by the number of new listings in that month. And basically it's like an uptake calculation. So how many of those homes that were listed sold in that month? So anything sort of below 40% is considered a buyer's market. Anything above 60% is considered a seller's market generally. So anything between 40, 60 is balanced. So we're basically balanced sellers in February, sellers in March, sellers in April, back down to balanced sellers in June. Then we're back down to balanced, almost at a buyer's market. Then we're balanced, buyer's market, balanced in December. You're going to love this. Yeah. December had a 100% sales to new listings ratio. Giant seller's market in December. 52 new listings, 52 sales.
Yeah, it doesn't take into considerations the spillover from the month before of another 50 listings probably.
Yeah, and it's also something to think about. Okay, just because the stats say one thing does not mean that's what's happening in the market. And that's sort of why we like to have a conversation and talk about it, because the stats can make it look like something is happening and that things are good. For example, you can have a release of stats in December and say, hey, it was a seller's market, great time to sell your home in December. Right. That's maybe not necessarily the case.
The other thing to consider when you're in a smaller market like us, there was a few months where there was 50 or 60 sales.
Yeah.
You get about a half dozen $1 million homes sell. It's going to pull the average up quite drastically. And then vice versa, you have a lot of 400-500K homes, investment type houses sell, will pull it down. So it's very important to look at the different markets and price points when you have such a small sample size, because it can really influence the numbers.
Yeah, absolutely. Absolutely. So, the next chart that we sort of wanted to show you was interest rates. So again, 2023, the year of interest rates. So basically what we wanted to show you was the bond yield and how that fluctuated and how we can sort of see that correlate with the number of sales and maybe buyer demand throughout the year. So we can see the bond yield graph here, and we can see it below 3%, generally traded below 3% in April, which, if we remember, was the highest average price in Peterborough was during April.
Right.
Then we can see it climb back up to, around 4.2%. So a 1.2% increase in around 6 to 7 months. That's nuts. And again, this directly impacts your fixed rate. So that would mean, your fixed rate for mortgages would be 1.2% higher for that 5-year fixed rate if the bond yield for a 5-year bond went up 1.2%. So we can see how that directly impacts not only the average price, but buyer demand. And we are starting to fall. Now, it has sort of fallen close to that 3% range, but it didn't quite reach 3% and then climbed back up. So, let's see what happens. Maybe if we see a sub 5% fixed rate in 2024, will we see some buyers come back? And that sub 5% generally comes when the bond yield is below 3%.
Yeah, that's an important thing to note is fixed is tied to the bond yield, but the Bank of Canada, when their updates are tied to variable, right?
Yeah, so now let's talk about Bank of Canada. So we did see some increases this year, but they were just 3/4 points.
Right.
So we saw an increase on the 25th of January, and that was a 1/4 point. Then they held, and then they went 2 back-to-back increases in both June and July, both 1/4 point increases, and then they held their rate. Now, most economists are predicting that 2024 we've reached the peak for both the bond yields, hopefully, and the Bank of Canada's overnight rate. It's only sort of downhill from here, according to the economists. Now, maybe they flipped the coin and came up with that, but I would trust, there are some well-respected ones that do agree that we're going to go down for the overnight rate. TD Economics actually just released a chart last week that said the overnight rate from the Bank of Canada would decline from 5% to 3.5%, which is a pretty big decline. That's 1.5% by the end of 2024. So I guess the question is, we're not mortgage professionals, but do you go out and get a variable rate? If we're at the peak, do you go out and get a variable rate? We did see a lot of variable rates, when they were low, but those people also suffered a lot from those Bank of Canada increases. So I don't know. I think it depends on your situation. What are your thoughts on variable rates?
If you believe we're at the peak, I don't know, you need your crystal ball, but if you believe you're at the peak, then you want to go variable because you'll get a lower rate for this market and it'll consistently trend down as economists are predicting the market will go down. We don't know what curveballs are going to be thrown out there in the global economy. So there is a bit of risk to that. So maybe the happy medium is doing a short-term fixed.
Yeah.
If you're more on the conservative side, but if you believe that we've hit the peak, then maybe variable is the way to go.
Yeah. I think definitely speak with a mortgage professional, see what's right for your financial situation. If you do have a fixed income, maybe the fixed makes sense. It's going to be this every single month, and I get paid this every single month. Easy, just subtraction off the top sort of thing. So yeah, definitely speak with a mortgage professional. All right, so now let's talk about 2024 predictions. So the first big question.
You can go first this year.
Oh yeah? The first big question is, will there be a recession? The next quarterly GDP release is for Q4, and it's on February 29th, which is kind of fun. It's a leap year. So it's on February 29th. Are we going to see negative GDP? Are we going to see positive GDP? If it's negative, it's a recession, unless they revise Q3. But what do you think? Are we going to see a recession or not?
I say no. I say similar. It's going to be fringe.
Okay.
So it's going to almost feel like a recession.
Yeah.
The numbers are going to be very close to zero. But I do think by Q2, you'll see things start go up a bit.
Okay. Yeah. So that would be very interesting. I think that, hopefully that would sort of help a lot of people. As the doom and gloom guy, I got to disagree just for fun.
All right, let's go.
I think we're going to see a Q4 decline, and I think we're going to be in a recession. I don't know if it's going to be a prolonged recession or if it's going to be short.
Yeah.
Now, population has been nuts.
Yeah.
1.25 million people in the last 12 months. So does that help your GDP? Absolutely. Hopefully those people are working, and that's why it's sort of important to track the jobs number. Now, the jobs number, who knows where they get that from? But, I believe I saw a chart recently that showed the average number of hours worked per week is on the decline. So there's a lot more people working part-time rather than full-time because potentially employers can no longer afford to employ them full-time. So, if that trend continues, I do think we will see a recession. I hope we don't, but I do think we will. And I do think that is going to tie into the 2024 real estate market. Now, one sort of situation we can look back on is COVID. So during the COVID-19 pandemic, we did see a recession, but we also saw a pretty crazy real estate market.
Oh, yeah.
So you think about recessions and you go, awful, people are going to be pulled back. We don't have a lot of money to spend. We're losing jobs. We're getting laid off. You think of 08, 09, that's what you think of. But we didn't see that during COVID. We did see 2 back-to-back quarters of negative GDP. Right. Then we went positive and real estate blew up. So even if we do see a recession, if rates come down, how do you think that will impact the 2024 real estate market? So they're predicting, spring, summer, we will start to see some rates come down a little bit. Once that first announcement comes out, do you think we'll see a flood of buyers come to the market and people hoping to move?
I do, because the reality is people have put their plans on hold, like a lot of people.
Yeah.
Because of the market we're in. And there's just people just chomping at the bit to go.
Yeah.
And as soon as they see some decent, healthy economy indicators, I think they'll go. Just like how we had the inventory this year, but we didn't have the buyers.
Yeah.
It could flip. That's the other thing, is what happens is all the buyers will flood back. And if the inventory is not there, we'll start to see prices go up again. So I think we're looking at probably after we see the rate decline, most likely in April, they're thinking. Again, these are just predictions, but then I think we'll have another spring market this year. Prices will trend up. Sales should be pretty good. Similar to last year, it's just what happens in the Bank of Canada and the bonds will have a big piece of that, I think. I think if they hold the course after a couple of reductions, we might have a pretty healthy year and maybe a traditional fall market. That's what I'm predicting.
Okay, so you think spring and fall market and a lull in the summer.
A lull in the summer, maybe trend down a little bit. I think we're going to have the first full conventional year since 2019. And we'll end, if we're doing the year-over-year predictions, we'll definitely be up. Or we get into that, but we got to be up at least 5%.
At least 5%, eh?
Yeah, that's what I think.
Okay. Yeah, so I'm gonna throw some numbers out.
All right.
No. I gotta agree with you. So I think even if we see a recession, I think we will see buyers back to the market, because most of the conversations I'm having, I'm waiting until spring, I'm waiting until interest rates come down, and then I'm thinking about moving. Those are sort of most of the conversations I'm having. And I think once, and it's just anecdotally, but once those interest rates do come down, I think buyers are going to come back to the market. So in terms of sales numbers, I think we'll see, I'm going to say an increase of 8% year over year in the number of sales.
After how low it was in 23, yeah.
Yeah, 8 to 10%, I think, in the number of sales annually. Average price, I think I'm going to go with, I'm going to go with 7 to 8% in the average price. I think we'll see a pretty large increase, and that is due to the supply and demand. I think we'll see demand start to match supply. And I think once that happens, because there won't be as much inventory on the market for the buyers to choose from, I think we'll start to see prices trend upwards because of that. And especially in the spring. And then I think we'll see it in the fall as well.
Well, it's way less fun when we agree.
Yeah, I know. I mean, I'm still doom and gloom. Don't worry, but it is my middle name.
So if there is a recession, probably a very brief.
Yeah.
Quarter.
It's impossible to say, because I think there's a lot more uncertainty this year than there was last year. I think there's more this year in 24, because I think people were expecting I for one, and a lot of the economists and people that I sort of tune into, we're all expecting things to be pretty bad. And I think they were bad, but I think we managed to sort of get out of it.
Yeah.
I know that, you know, at one point gas was sort of, I think it was like $1.60 or something here. Yeah, it was nuts.
Down to 130, 125 now.
Yeah, it was nuts. And then I know grocery prices, like I think we saw the bulk of inflation already. And I think inflation numbers are sort of going to be around that 3 to 4%. Yeah.
See, I'm not an economist by any means, but the way I think about it is the 2 negative quarters of GDP is just a metric, but it's not black and white.
Right.
What happens? What's the difference between being almost at zero, but in the plus, to just negative? Well, what's the difference to the consumer, to the average Canadian? Probably not much, but by the metric, in 1 year in a recession, that's where I'm throwing you a bone here for your recession prediction.
Yes.
Because even though, so as we mentioned earlier, Q2 was a negative number, and then they reassessed it, and it was a slight positive, but Q3 was a negative. To me, we're talking marginal differences for that metric. So to me, we were in a fringe recession.
I'll take it.
Yeah,
I'll take it. Yeah,
got you.
Yeah. So yeah, I mean that's let's see what happens. We could both be wrong. I wouldn't be surprised if we were. We're just a couple guys on a couch with a sleeping beagle. That's pretty much it. So, I mean, yeah, thanks for listening. Thanks for watching. And we're hoping to sort of do this every single month now and get back to doing it in person because it's a heck of a lot more fun. So cheers. And without further ado, that's all, folks. Take care.